Good afternoon. Thank you very much for the AgriFin team for this opportunity and also making NMB present in this forum. Where is NMB? NMB actually is in Tanzania, is one of the leading banks, and recently we have been awarded with Euro money as the best bank in Tanzania. We have about 150 branches at the moment, 500 ATMs, 1.8 million clients. In Tanzania, we are about 46 million. And the population which has been banked is only below 12%. So you can see financial services is actually very low. And if you look on the population, about 22 million, actually they are earning living from agriculture. But little has been done in terms of meeting the financing needs in that environment. And the big question would be, why? And I think it's historical. Tanzania has been believing on actually having an economy led by the cooperatives, socialism. And then up to 1985, they found it's not working. From there, they started privatization, and then there was no vibrant private sector. That's why you see there is a mix of things happening. Financial institutions are struggling to see also how to finance agriculture, and we are in that setup. That's why you see we have about 44 million hectares of arable land, but only 25% of that has been utilized. We are talking of 11 million hectares which is being cultivated at the moment. We have 29 million hectares which is suitable for irrigation, but it's only 1% of that is being actually utilized. And all this is because of lack of sustainable finance, both long-term and short-term. Agriculture contributes about 28% of the GDP, and we are estimating that the growth of the GDP would be 7%. And most of this is not from the agricultural sector. It's because of the discoveries of natural gas, which is actually happening, construction and mining sector. And those are the key sectors which we are looking to actually get the GDP growth from. If we look on the agricultural department set up in our bank, we have agri-commercial manager who is actually in charge of the retail agri-financing. And we have manager for agri-operations who is actually looking after the loans after approval, how are being booked into the system, monitoring and supervision, and actually gives us feedback if something is going wrong into the booking of the loans and also in the utilization. We also have manager business and product development, and we have a full-fledged research unit. Under the head office, we have the zones. We have 7 zones, and we have agri-experts located in these 7 zones. And the zones we have allocated based on the potentials which exist in those zones. We also have at the branch agri-loan officers who are doing the processing of the loans using the various templates which we have. And in that setup, if you look on the agricultural landscape, the bottom of the pyramid, which is about 70%, is actually dominated by the smallholder subsistence farmers. And the 25% of that is dominated by medium agri-enterprises. And 5% is actually large corporate farmers, commercial farmers. If you look on the challenges which we have on the bottom of the pyramid, and this is the question which actually makes us here, that how do you address that challenge? They have 1 to 5 hectares of land. And it's very challenging for them because they don't use improved seeds, they don't use fertilizer, they don't use chemicals, they don't use any technology. So if you want to finance them in that aspect, you really need to initiatives like using our foundation, NMB Foundation, to create farmer groups which are linked with the middle of the pyramid and the top of the pyramid. But yet, at the top of the pyramid, we don't have a strong partnership with the private companies because they don't believe on the bottom of the pyramid. If they have to contract them for a certain volume, will they deliver, given the resources which are not available at the bottom of the pyramid? And that's why you find it's very challenging. If you are not trying to address the issues at the upstream to the downstream as a bank, and you would find that not most banks actually are having appetite into the agricultural sector because of that mix-up. And for NMB, if you ask us, are we doing it profitably at the moment? When we started, it was not purely a profitable undertaking. We started as saying it's key because 80% of the population is depending on agriculture. And 22 million actually are getting living from agriculture. And we have the largest network, these 150 branches across the country. That is about 95% of all administrative districts. So it's key to us, it's our strength. So how we should do it is actually introduce products from the upstream first, trying to organize these farmers into groups, into cooperatives, and ensure that we link them with the middle and the top of the pyramid, which is also not easy because of the relationship which has been there. There is this concept of middlemen actually dominating the sector and middlemen exporting to the export markets and to the processors. In the chain, we have segmented. And the segments which we have is actually based on departments. Our department, which is agri-financing, is dealing only on the upstream, only for the bottom of the pyramid, trying to find solutions how to link the bottom of the pyramid to the middle and to the top. The middle of the pyramid, we use our micro and SME department, which is actually using the retail approach. So the processors, they are using SME department, and they are using the retail approach. The larger processors and exporters, they are being served under corporate department using relationship approach. And you would find that the three segments are completely, requires completely different approach in lending. The bottom of the pyramid would actually require a scheme-based, groups-based. The medium would require a retail approach. The top of the pyramid, they would need relationship approach, that they depend on what the top of the pyramid needs. If it's trade finance, treasury products, cross-selling. How do we assess cooperatives vis-a-vis the private companies? You would see for the cooperatives, and based on what Hans was presenting, the cooperatives in Tanzania is not similar to what is in Netherlands. Netherlands, the cooperatives are mature. But in Tanzania, the cooperatives, we are trying to develop them. They are very young. So if you look for the financials, past 3 years financials, you will not get it. So we just use past 3 years production and sales turnover. On the good cooperative management and leadership is a requirement. for the cooperatives. And cooperatives must be formed from a common need. The cooperatives which we need now. Because previously it was a state owned, that they appoint the board, they form the cooperatives, and they support them for investments like putting the ginaries in, cashew processing factories in, with support from development partners. So initially, the processing of commodities was also through the cooperatives. But now, after privatization, you see the processing is now going to the private. So the model going forward, if you keep on financing investment for cooperatives, you would see that they are not well capitalized. So what we see going forward is actually a partnership between the producer cooperatives with the private processors and off-takers and exporters. That's where we see the future. But if you ask me that the cooperative system would grow to the extent that it can actually go along the chain, producing, processing, exporting, I see that will be a great challenge without support from development partners or from the governments, which I see also that is not very much possible because of funding. If you look on the private companies, what we really look at is past 3 years financial statements, audited financial statements, good management with competent agri-staff, good business plan must be submitted, past 3 years experience in agricultural business is key, and positive equity, including project financial statements and cash flow projection is key. For financing to the pre-harvest, which is to the upstream in the value chain, farmers must have a farming contract, crop to be produced, volume and price must be known in advance. There must be a purchase contract with tenor indicated signed between farmers and financially strong off-takers. Farmers must have 3 years track record on production and sales turnover. Pre-harvest finance amount is up to 50% of the expected sales, and the previous sales are used to check if it's realistic. When they were presenting the agri-loan evaluation system, they were saying in TAC they do up to 75, but for us, for the pre-finance, we do up to 50%. Projected income, balance sheet, and cash flow, which is realistic, is key. Tripartite agreement, buyer, bank, grower, is also needed. What we see there is actually the model which we are using, where the processor signs a contract with the farmer or the farmer groups, and then the farmer groups sign a contract with the bank, and then the bank advances up to 50% of the expected sales proceeds as input or production loan. And when the crop is sold, all the sales proceeds are deposited into the farmer's account with the bank. We have developed the templates, which actually will be in the website, which you can follow it, because it's a long document. But during the presentations, we saw using only credit scoring is not easy, especially for the bottom of the pyramid. You have to use both qualitative and quantitative. And in these two templates, you would see the qualitative part and quantitative part. On the inventory finance, what we consider as key is farmers or individual companies must be dealing with non-perishable commodities. And also, commodity being financed must be delivered to the controlled warehouses before loan disbursement. All disbursements are made against receipts. And if there is an advance needed, the borrower must provide collateral. There must be approved warehouse operator, independent stock custodians approved by the bank, and which is also approved under the Warehouse Receipt Act of 2005. So there must be a legal framework which governs the warehouse operators. A maximum loan amount is determined using cash flow projections, and disbursed amount is up to 80% of the value of the commodity which has been delivered into the warehouse. audited financial statements for cooperatives is not mandatory because in the first place, you cannot find them at the moment. We are using our NMB foundation to kind of train the cooperatives on good governance, on keeping records, preparation of business plans, and preparation of good cash flows. The model we are using for warehouse receipt finance is commonly known that the farmer deposited the goods into the warehouse, and then the receipts can be delivered to the bank as a collateral, and we advance up to 80% of the value of the crop. The 20%, we are actually keeping it as a control on the price volatilities. That's the only way we actually look on how to hedge the price volatilities. If we look on what we did for the cash flow before introduction of warehouse receipt, which was done in 2006, farmers were starting from deficit, and when they started harvesting, they started paying all the debts. After harvesting and paying all the debts, they started falling again to the deficit. So that was the trend which we were seeing before introduction of the warehouse receipt finance. But when we introduced warehouse receipt financing, we started seeing the prices going up because of reduced information asymmetry. So the prices went up from 300 shillings to up to 1,000 shillings per kilogram. And what you see there is actually farmer can now get a margin. From this margin, we started designing a sales product, a saving product, which is called NMB Kilimo package, where the farmer gets a personal account, and then all the funds, when they've sold all the commodities through the warehouse receipt system, is deposited into their personal account. After that, we actually market to deposit some of the sales proceeds which they've obtained from the market to save. And in that saving, we also give input loan. If the farmers save 1/3, we give 2/3 as a loan. And that is input loan, which is also provided as a package for this account. How do we finance despite the challenges? As I said, on the top of the pyramid is actually, we are using relationship approach, and it's actually traditionally bankable. As Hans said, that's very easy on the top of the pyramid, but if you look on the bottom of the pyramid, you have to use scheme-based, you have to use SME approach, and at the same time try to link this chain using the approach of Ross. You use the value chain leader to kind of coordinate from the top to the bottom. And using that one, we have tried to focus on few crops. It's not that we are financing all agricultural sector. We are looking for the sectors with substantial volume. And these are cashew, coffee, tobacco, sesame, pad, and maize. What we are saying is actually no one size fits all, because if you look on the Tanzanian landscape, it's completely different from other countries. And based on the transformation which we have gone through, you would see that Tanzania requires a different model to ensure that the needs of the agricultural sector are addressed. And especially when it comes that the processing, the investment sector is actually not funded because of short-term deposits. So you would see the sector requires a lot of funding in the long term for long-term investments in the infrastructure, which includes irrigation, storage facilities, roads, and communication. So we require skills and competence which is actually able to design financing for the type of the landscape we have, which is actually very complicated to finance, specialties. And actually, Florence, when she was talking about the skills to finance smallholder farmers, I agree with her that you really need to recruit people who have been doing agriculture, who have been into the agricultural universities and turn them to the bankers. And this is also very complicated because commercial banks would want to kind of get the ready people to do the agri-financing, which are not there. You also need to look on the delivery channels, which are effective to finance agricultural sector. But most banks would want to stay into the urban areas. They are not going into the rural. They are not designing the agents banking, payment methodologies to kind of reach the smallholder farmers using mobile banking and other alternatives to reach the rural. How to structure financial products for agriculture given the specific country agri-landscape, that's key. And that's where we see even the credit scoring, if you don't actually add up with relationship approach, understanding what is happening into the area where you are financing, then you can't use only credit scoring without combining it to the cash flow based and to the assessment based. Business analysis, financial analysis, and learning analysis should be key on top of the scoring tool. Thank you very much.